In this video, we're going to be discussing retail sentiment and how traders can use the positioning of retail traders to their advantage, whether you're trading Forex, futures, cryptos, etc. Let's jump in and I'll show you how to use this indicator. Welcome back to the channel, guys. Today we're again talking about retail positioning, or the retail sentiment concept or indicator, and how you can read it to quickly identify what retail traders are generally doing on a particular asset or currency pair. So retail sentiment, what is it? Well, on a high level, it is basically just the idea of looking at the current positioning of where retail traders are buying or selling / shorting a particular asset. If you took any asset off of this list, for example, Euro GBP, what we can see here on this screen is that, of course, the left-hand side is all the different assets in question, and the right-hand columns simply show the long to short ratio percentage-wise of this particular asset. So if we looked at Euro GBP, you can see that we have an 89% long ratio if we zoom in on the right, and of course, 11% short ratio. In terms of retail traders, they are 89% long and 11% short. So what is this? Well, of course, sentiment analysis is something I want to talk about before we go further in this video. Now, there are different columns of analysis that I like to think of, and the three that I generally refer to are FA, SA, and TA. Now, if you're not familiar with what this stands for, we'll go through them real quickly. FA stands for fundamental analysis. This is looking at headline news. This is looking at inflation studies and interest rates and forecasts for what the Federal Reserve may be doing. Technical analysis is what most retail traders are familiar with. This is, of course, looking at chart patterns, trends, moving averages, that sort of thing. This is the most talked about of the three columns. And sentiment analysis is the idea of looking at market participants to get an idea of where the market may go. Now, this is a really interesting indicator, and today we're talking about one half of SA. The other half, however, is found in the Smart Money Tracker. And now on your screen, you'll see a thumbnail of a video that I went over the Smart Money Tracker inside of the EDGEFINDER, which is the software that I'm using here, that allowed us to take a look at what COT data or institutional traders were buying and selling. Now, again, you can also find that video that will be linked in the description, as well as a card in the top right. But I want to talk about today the other side of the coin, which is retail positioning. Retail positioning, again, refers to the, for lack of a better term, the dumb money crowd, the crowd that tends to lose money. Now, of course, when we talk about the Smart Money Tracker, we talk about COT data, we talk about institutional traders, all of those things are synonymous. We generally like to look at those things as, hey, that's a positive affirmation. If we know, for example, if we're looking at Euro Pound and institutional money is shorting that currency pair on average, that's a nice bias to be short ourselves. But when we talk about retail positioning, we need to discuss something. We know that retail traders on average lose money. And so if retail traders are losing money and they are long on something, that to us is more of a short signal or a sell signal. Now, again, this is the way I read retail sentiment, and this is basically what we're doing here. We can select any particular thing. Let's say we want to look at currency pairs, and I selected just the majors from this top right column here, just for reference. So let's take a good example. Let's take a look at USD/JPY. USD/JPY is currently 67% shorted by retail traders and 33% long by retail traders. I want to pause for a second and ask you, would you rather be, just on this, not looking at the chart or anything else, just for a moment, would you rather be short dollar yen with the retail crowd or long dollar yen against the retail crowd? Now, again, when I say with or against, I mean by, would you rather be in the majority, which is shorting this, or the minority, which is actually going long on dollar JPY? I'll tell you where I'm currently I'd rather be on the long side, because again, we know that this crowd that we're pulling data from typically loses money. Now I want to show you something while we discuss this. Let's take a look at that example. We'll punch in USD/JPY to take a look at this. And what we can see here is that USD/JPY has been trending to the upside. what you will notice when you take a look at retail positioning is that generally speaking, retail traders are contrarian to the market's major moves. So when we look at the daily chart and we see dollar yen is trending up, and we mentioned that retail traders are shorting this currency pair, that is an interesting view in my opinion, as what you'll see is very frequently, we could take the other extreme, USD CHF, and I bet you right now that this market is probably trending down. So if we take a look at USD CHF on a daily chart, there you go. You have this downward trending market, and retail traders are, again, they are long this particular currency pair. So we like to use this as a contrarian indicator. Now, because we see this, does this just mean immediately I'm going to go short just because retail traders are? No, this is a confirmation tool like everything that we discuss on this channel in terms of strategy using the EDGEFINDER, which is our market scanning software here that we're looking at. We use this as confirmation to our existing trading strategies. So this is how anyone can use retail sentiment to keep an eye on what the crowd is doing, to avoid, perhaps the most important concept here is to avoid being caught in the same crowd as the retail traders who typically are losing money. Here's an example right now of something that's not so polarizing, which is gold, 57 to 43. I personally only really pay attention to something once we get more into the 60 or 70% one-way direction. So for example, the S&P 500, retail traders are 66% short on the S&P 500. That to me would actually signal a bullish bias on this currency pair. This index. So in the case that this thing is pulling back, I actually will be looking to get long. And I'll show you an example as we speak right now. So I am actually looking at the NASDAQ, and I have a current position open in my own trading account, and here it is. So I am currently long the QQQs, or the NASDAQ ETF, and I'm currently long. It's a down day in the market, and some of my other things are not working out so well. You can see I'm down almost 1% on the day on this particular account, but the concept here being, we know that retail traders are typically, again, they are shorting this upward momentum, and I am looking to actually go against them and fade their trade, which is again a short bias. So this is how retail sentiment can be very, very useful to traders. If you would like to get access to the software that I'm using to grab this retail positioning, as well as all of our other key information like seasonal trends, the smart money tracker, and so much more, you can find out more information down below in the description to set up yourself with access to our software, which is called the A1 EDGEFINDER. My company is a software company that builds tools for traders. And if you'd like to get access and hands-on data like this in your toolbox as a trader, then feel free to check out the website linked down below in the description to sign up for the EDGEFINDER. And also, guys, as you are watching here, if you use code YTVIP, which is also linked down below in the description, there's information about this, you'll knock off a subscriber discount off of our software. So just by watching this video, remember to use code YTVIP, and that will give you a subscriber discount off of our software. Thank you for watching. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.